Again, just because you have credit does not mean that you have to be in debt or underwater. Within this video, we will talk about credit and why it's important, and how credit applies to buying a house, and how to boost your credit score to purchase your first home. My name is Deja, and I'm a real estate agent in Massachusetts, and I help people buy, sell, and rent successfully. Again, real estate agent, so I'm going to be giving tips and tricks that I've utilized as somebody who has had a credit score in the 790 range for a long time. Stay until the end, where I'll give my top credit tip that people don't often talk about. This will be tips in my experience rather than financial advice. Just want to put that out there. When purchasing a home, there are minimum credit requirements. So credit is important. Your credit score is important because that helps you with buying power, and also first-time home buying programs that have minimum credit requirements. Also, the higher your credit score, the lower your interest rates tend to be. And also, the higher your credit score, the more negotiation power and more power you have in the housing market and housing purchase game, or purchasing your house, like, pretty much. And it's also really important to understand how credit is broken down. So credit is broken down into, I drew like a little pie chart. So your credit score is broken down into 30%, which is the amount owed, 10%, which is new credit, which is hard versus soft inquiries. Then there's 15%, which is the length of your credit history. Then there's 10%, which is the amount of credit or credit mix that you have within your credit report, whether that be loans, a mortgage, your car payments, credit card debt, all the things. And then lastly, the largest amount, which is your payment history, which is 35%. And all of this is combined to form your credit score. And why does this matter? People often don't understand the importance of credit. I like to say that America runs on debt. But just because you have credit doesn't mean you have to be in debt. Let me say that again. Just because you have credit does not mean that you have to be in debt or underwater. I forgot to mention, credit is so important because it also not only affects your home ownership dreams, but if you're trying to rent, it's getting vicious out here. I recently had to call a leasing agent about a property, and he said the minimum credit score was 660 because anything lower, it's not worth the risk. His quote, anything lower than 660 is not worth the risk. It's getting murky, it's getting scary out here. So make sure you are setting yourself up for success. Here's how I keep my credit in tip-top shape, and as promised, the most important tip will be left at the end. So number one, when I got my first credit card, I started with a secured credit card, and that is where they take your money, put it into the card, see how you utilize that money, and then they transform the credit card into a adult credit card. So that's how I started. I started with a secured credit card. They saw that I was able to manage that secured credit card, and then they converted it to a adult credit card. So next, I never max out my credit card. I understand that circumstances happen, so this is just what I do. I've never maxed out my credit card. I don't even get close to the spending limit. I always keep my utilization down and keep my oldest line of credit open because that relates to credit history. So even if I don't really use that credit card as much, I'll still put like a small charge, recurring charge on that card. For example, like a streaming service that costs, not in this day and age, but costs $4. I'll just pay off that $4 so they know the card is active and it continues to stay open in my oldest line of credit. I also pay down charges immediately. Once I spend it, I pay down. and I only put charges on my credit card, because sometimes people like to do some shady stuff, and with the debit card it's not as secure and it takes a lot longer to get your funds back. Also, I like to stay up to date and monitor my credit and spending like a hawk, whether that be statements or with Amex Platinum, they have the Amex FICO tracker, which is included in the service, so you could stay up to date with your credit. Also, if you get AAA or pay for AAA, they have a free Experian membership where you can also track your credit, social security card and credit information, and also any passwords or emails that are on the dark web or have been compromised, which is really important, because once somebody steals your social security number or identity, it's over with. Next, I do not live above my means. I don't buy things that I don't necessarily need. I don't buy things that I can't afford in the moment, or that is gonna hurt my pockets in the long run. I do not live above my means, and I do not spend above my means. My objective is not to keep up with the Joneses, because sometimes the Joneses are broke and in credit card debt, but they don't tell you that. Next, I don't believe in Klarna. So sorry. I do not buy now, pay later. If I can't pay up front, I don't need it. If I can't pay for that iPhone up front, maybe I need a track phone. Or I need to save for it. So that's my philosophy, and that's how I was raised. Even when I got my first car, I paid in cash. And I saved for it, because I don't believe in paying in increments. Even with my car insurance, I paid off like in total. So that's how I live my life. And lastly, the most important tip. Every year, I go into my credit card bank information and I ask for a spending credit increase. And why does this matter? Because when they increase my spending limit, I still spend whatever the credit spending was before. So here's an example. So say my credit spending limit was $200. The next year I ask for a credit spending increase and then increase it to $1,000. I still continue to spend in the 200 range, so my spending looks low. I'm able to pay it off, and my utilization, which is spending, is low, and that's good for the credit, because if we go back to our pie chart, utilization is 30%, I believe. My pie chart is not as comprehensive as I thought it would be. But this is good because every year the spending limit increases and my credit is not affected. In fact, it's actually helped my credit because it shows that I'm able to steward my money appropriately and also pay it off. And this is important because if you're rejected, it doesn't hurt your credit, but if you're accepted, it actually helps your credit. So those are my tips that have worked for me. A proverb or quote that I love is, you wouldn't ask a naked man for fashion advice. So you wouldn't ask somebody who is not very good financially for financial advice. So keep that in mind as you're interested in purchasing your first home. Go to people who are making sound decisions. And credit is king. Your credit score is king. Make sure your credit is in, I like to say, top 740. If you can't get it, 760, that range, because it's easier to negotiate when you have the numbers. But if you don't have the numbers, it's kind of like a shot in the dark. You get what you get. But again, my name is Deja. I'm a real estate agent in Massachusetts, and I help people buy, sell, and rent successfully. Take the money from my debit, from my checking or savings account, and just pay it off. And that has helped my credit over time. I also, what else do? I also don't, why?